Know two things that can easily improve Elliott wave forecast. Know two things that can easily improve Elliott wave forecast. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott Wave trading. Our website is www.24elliottwaves.com. The title of this video is Know Two Things That Can Easily Improve Elliott Wave Forecast. All right. The number one, role of the Elliott Wave principle is to allow traders, investors, to focus the next price move, all right, to set targets, to exit the trade, to know when to buy or sell, and when to be bearish, when to be bullish, when a specific pattern is completed, in order to profit in the financial markets, all right. But there are two things that traders can use to easily improve their Ellio wave count, all right? If you check out our YouTube channel, the 24 Elliott Waves YouTube channel, we have already recorded a video about how to forecast the fifth wave, the third wave, the first wave, talking about Ellio wave forecast. Check 24 Elliott Waves YouTube channel. Okay, there are video tutorial that will show you exactly how to forecast the end of the fifth wave, the end of the third wave, what to look for, and how to forecast the market using the wave principle. All right. When I start trading first, all right, I was a little bit lazy, all right, when it comes to drawing trend lines. I don't know why, because like every new trader, I was using technical indicators and I was not paying attention to the price itself. So I do not draw the trend line very much, though I know that I should draw the trend line, but I just don't know why. I was just not drawing the trend line, But over the years, I have discovered that the most powerful tool, apart from the price itself, we can use trend lines to make excellent trading and investment decisions. So for somebody who is engaged in Elliott wave forecast, one of the things that that person must use is the trend line. But I want to show you what you want to do, all right? So you are counting Elliott wave. So in order to forecast, the market, you must count Elliott wave. You must recognize the corrective wave. You must recognize the multi-wave. You must recognize the beginning of a cycle and the end of a cycle. You want to understand the Elliott wave principle, all right? So you are counting Elliott wave. You want to forecast the market, all right? So you want to know the end of the fifth wave, end of the second wave, when the third wave is likely to begin, and when the third wave will end, when a cycle will end, and you want to know all this in order to make accurate forecasts. One of the tools that you can use, is the trend line. The trend line. I want to show you on the chart. Suppose you are counting Elliott wave on this chart. You are identifying an Elliott wave cycle. A new cycle has a new cycle is beginning here. A new cycle, will start here. The old cycle has ended here. All right, and you are trying to forecast the next price move. All right. So if you are using the trend line, you can make excellent forecast. So this is additional verification for an Elliott wave practitioner that is trying to forecast the market. So you are using the normal wave count, normal Elliott wave forecast, but you can also add the trend line to make excellent decisions because the market will react around these zones. All right. So for the purpose of this demonstration, I'm on a monthly chart of a stock called Monster Beverage Corporation. The epic is, you know the drink, okay? If you drink Monster, it's MNST, okay? Mike November Sierra Tango, listed on the Nasdaq 100. So I want you to pay attention to the 2 point here. We have there was this high here. So for the purpose of this demonstration, we're going to connect the high only. So connecting a high and a higher high. So here you see that the price went up all the way here and then pull back and then start going up and hit this level and start pulling back. This looks to me, okay, like a flat correction in this section here. So I may say that an Ellio wave cycle has started around 2003 and now the trending phase has ended somewhere in 2006 and then followed by a flat correction, bringing the wave ending here, the cycle ending here. Then I may say that a new cycle has begun somewhere in 2009 and it was going up, okay? So suppose you were here and we see that and the price start going up. So we forecast that, okay, a cycle has ended here and a new cycle, okay, is about to begin somewhere in 2009 when the Federal Reserve has started printing the dollar and a lot of money was going to the stock market, okay? So for my wave count, I know that, okay, there's a high chance that, okay, a new cycle will begin. Now I want to forecast where is the likely ending phase of, okay, each wave, for instance, the third Ellio wave, the fifth Ellio wave, or the trending phase, okay? By using, you see the high here, and this high here, I have my red line here. So as I see that a new cycle has begun and the price going up, as the price approaching the edge of my trend line, I may start telling my client to be careful that we are approaching a resistance zone, that we may see a kind of correction very soon. All right. So if, for instance, I see that the third wave has ended here or something like that, or went above it, I may expect the fourth wave to retest this red line, and then the fifth wave follow that, followed by a price coming down. Using okay, the trend line, we can also improve our Ellio wave count to determine the end of okay, a wave. Okay, all right. So this is one example here. You see a high and a high here. This is the red line here. I want you to pay attention to my next line. This is the black line here. So I'm joining this time 2 point again. This point here. And this one here. So now we see, so we have first this point and this point, we have the red line, and this allows us to manage the risk around the red line here. Now the price went above it, and then start coming down, okay? So it start coming down all the way here, okay? It come down. So we may say, okay, now it looks to me that this trending phase has ended and a correction has begun, okay? So we may say, okay, a correction has ended now, probably, okay, or a flat correction is developing here, all right? And we may say, well, it's the end of that correction and what is taking place here. We can use trend line, and this time I'm using this point, and this point, that's the black line here. And you can see that as the price pullback is going up, it hit the end. So generally, after the price form a high and higher than this, okay, if a new trend has begun, the price will try to retest that okay, bullish trend line. You see here, try to retest it. Here again, you see, we have this point, and this point allows us to draw the black line. Price pull back, it's going up, it's going up. It's likely to touch the trend line again here. By combining the trend lines with our wave forecast, we can make excellent decisions and forecast, okay, how the price of the financial instrument will behave when it reaches these, okay, hot spot trading zone. You can notice that on this monthly chart, as the price went back to retest the black line for the first time since we draw it, you see, all this year, finally it came back to retest it here, okay, in the end of 2014, trader took profit, okay, for 1 month the price pulled back. And see, with that information, we can this will allow us also to improve our wave count. So you see this high and the high, you draw it, and you are counting wave, and pay attention to this line, how the price will behave. You may see some excellent correction ending somewhere near or starting somewhere near this trend line. So by combining the trend line with your wave count and your wave forecast, you will improve, okay, your wave forecast. So this is about the black line, as you can see here. joining a high and a higher high. Okay. Now pay attention to the black line here, which we have drawn recently here. There was so this time we are connecting 2 points again. All right, this high, this point, and this point. The price must start going down first, so this move must be completed before we can put this spot here, because we don't know what the price will do as it came here. So the price must come down first and start going up. Then we have it now. Now we put it here, this point, and this point is now ready after the price pullback. As it start going up, where is it going to end? There's a high chance, you see again. So this point and this point, price pullbacks are going up. There's a high chance that the price will try to revisit that trend line, and on the edge, trader took profit and it crashed down. So now you see now how a trend line, a simple trend line, can help traders improve their Elliott wave forecast. Okay, right? Or revisiting each time. Okay, the high and the higher high. Okay, connecting a trend line. The red line you see here. Okay. Sometimes you see here the price went above it, pull back. Now as it went below it, retesting it. Look here, you find a resistance on the edge of our red trend line. Powerful tool for Elliott wave forecast. Okay. So we leave these lines on our chart, and we can leave them there. Okay. And in the future, you may see that the price will go back and revisit these trend lines at different stages. This will allow us to improve also our Elliott wave count. So leave them on your chart. Okay, that's why you see many lines on my chart that I do not want to remove, because I need them, okay, in my wave forecast. Okay, so this is about the green line here. So recently you see the price pull back to retest it here, find a resistance. Now look, it came back to the black line. The black line that we draw the second time, you see here? As you drop it down here, after we draw the green line, now it's seeking the black one here, you see? All right, how powerful is it to help us in our navigation of price structures? Okay, now pay attention to the green, the black, the blue one here. The price did not touch it. Now you see here this point. Now this time we are paying attention to this high and this higher high. So what we are doing, we are connecting a high and a higher high. In a downtrend, we'll do the opposite. We'll connect a low and a lower low. All right. So though all the example that I'm giving to you now is during an uptrend, a bullish phase. In a downtrend, we'll connect a low and a lower low. And this strategy is valid on a daily chart, weekly chart, hourly chart, on every time frame. But it becomes very, very powerful, especially on a monthly chart or time frames that are higher than a monthly chart. But I like the monthly chart very much for this strategy. As you can see, it's working beautifully. The blue line, will the price come back and revisit the blue line before revisiting the red line here? It's a correction underway here. The next thing, talking about two things that can easily improve Elliott wave forecast. The first one is about trend line, connecting a high and a higher high in an uptrend, or connecting a low and a lower low in a downtrend to pinpoint possible reversal point where a pattern is likely to be completed. To observe, okay, the prior reaction at that point in time in order to determine the end of a cycle and end of a pattern, okay? So this is about the first thing that can easily improve Elliott wave forecast, simple use of trend lines, okay? The second thing now, okay? So we are now on the monthly chart, we are counting waves, all right? And we are doing all sort of blah, 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 like the drawing trend line. If we stop, this is the second thing, if we stop only on a monthly chart, okay, is an Elliott wave trading mistake. Repeat, if we stop only on a single time frame playing with the wave pattern, we are likely to be completely wrong or see only partial picture. Are you with me? So now we are on a monthly chart doing this exercise. It makes sense to validate what we are doing here on a higher time frame. So if you are counting where we are forecasting, okay, the next price move on one particular time frame, it will make sense to go to the higher time frame to validate our Elliott wave forecast. So here you may see blah, 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 first wave, second wave, third wave, correction, cycle, and so on, forecasting the end of the fifth and fourth, and so on. Now, if you stop only on the monthly chart, it's a trading mistake. So the second thing about that can improve, okay, can easily improve Elliott wave forecast is the use of at least a two time frame, a higher time frame to validate our Elliott wave forecast. So if you find yourself, for instance, on the hourly chart forecasting Elliott wave, okay, at least you must go to a higher time frame to validate your Elliott wave forecast. If you draw your trend line like this, you are forecasting on one time frame, go to a higher time frame. So because I'm on a monthly chart, I don't want to stop on a monthly chart alone. I'll go to the yearly chart, for instance, and it will become a little bit better what we are talking about on a monthly chart. So what do we see here on the yearly chart? We see a kind of consolidation. That's all I can see on my chart. Sometimes this kind of thing, if you zoom into it, can be something different. But with this picture that I have, I see a kind of consolidation, and I see, okay, a breakout. Okay, don't take them too serious, because if you zoom into it, you may see something completely different like this, because it has been many years, so it's not very clear. It's not all straightforward like a consolidation, but it looks like a consolidation on this chart. Okay, so with this information that we have on the yearly chart, you see that, okay, there was it went up, pulled back, and probably, okay, we can say we are now in a bigger, a third Elliott wave. Is he just third Elliott wave, or is he third wave plus fifth wave? All right. So now you see, now it looks like 1, 2, 3. No one can deny that. Price went up, price pulled back, price rally up. Okay. It makes sense. It makes sense. It is also powerful. All right. So do not stop on one time frame. Always, as you are counting waves, okay, as you are forecasting the market on one time frame, always use another time frame to validate your wave count to see the bigger picture. So the bigger picture that we see on this yearly chart, it looks to me that we have, okay, first wave, second wave, and we are now in the third Elliott wave. All right? It makes sense? It is also powerful. But because you see the third wave is quite compact on the yearly chart, if you want to zoom into it, we need to come back down on a lower time frame to see the bigger picture. And I may even go to the weekly chart to see, okay, what is happening now. Zoom into it at the top of my third Elliott wave to see what is all this about, what's happening here, to determine, okay, what is happening here at the end of my third wave. Is here a third wave? If you zoom into it here, it looks like there's a trend of phase trending first, a pullback. It looks to me that what we are seeing on the yearly chart, it looks like to me like we have a third Elliott wave plus a fifth Elliott wave combined together. Okay, up, down, up. All right. So these are two things that can easily improve Elliott wave forecast. Trend line join high and a higher high, a low and a lower low in a downtrend, and using, okay, at least a 2 time frame. We cannot afford to forecast waves on a single time frame. Once we forecast the wave on one time frame, we must use a higher time frame to validate, okay, our Elliott wave forecast. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. All right. If you have any question, put it in the comment section, or any suggestion about video that we can record, put it in the description area and in the comment section, and we will get back to you. If you love this video, feel free to share it on social website, Google+, Twitter, and Facebook. If you love our videos, now it's time to subscribe to our channel so you may stay tuned and follow us on YouTube. Right. This is the end of this video about know 2 things that can easily improve Elliott wave forecast. There are different methods that we use to forecast the 5th wave, the 3rd wave, okay, to forecast the market. But by combining the 2 things that can easily improve our wave count, we can boost our Elliott wave count. And the 2 things are trend lines and a higher time frame to validate our Elliott wave forecast. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about know 2 things that can easily improve your Elliott wave forecast. Speak to you soon.